The money myth. Have you ever stopped to think about this? Most people spend their entire lives chasing money, but never truly understand how it works. I'm not talking about the definition in books. I'm talking about the invisible system that decides who sleeps peacefully at night and who wakes up stressed, worried about bills. The truth is this: no one is going to explain it to you. The people who benefit the most from your ignorance are the ones who wrote the rules. They created a game you don't even know you're playing, and every day you follow it unconsciously. So, what is money really? Many say it's a medium of exchange, or a store of value. Technically correct, but incomplete. Money is trust. It's a collective belief that a piece of paper or a number on a screen has value. Without that trust, money is nothing. No government can force it to work. It exists because we all agree it works. When you receive your paycheck, think carefully. You are not receiving wealth. You are receiving a promise of wealth, a claim on something that exists, dependent on collective belief. If everyone decided tomorrow that it is worthless, it would be worthless. Centuries ago, some people realized if they could control that trust, they could control everything. They built financial systems and institutions to make money seem mystical, almost magical. And it worked. Most people never question it. They just use it. And when they don't have enough, they blame themselves. This is not an accident, it's intentional. Think about it like this. Imagine a game of Monopoly where only a few players know all the rules. They can make new rules on the fly, lending you money, taking your properties, and setting prices. You think you are playing fairly, but in reality, the game is stacked against you. That's exactly what happens in the real financial system. How banks really work. Let's be practical. When you deposit money in a bank, it is not just stored, it is lent out. This is called fractional reserve banking. Banks only need to keep a fraction of deposits in reserve. The rest is created digitally and lent to others. Here's the key point. Most of the money in the system doesn't physically exist. It exists as debt. Your paycheck, your account balance, much of it only exists because someone, somewhere, is paying interest on a loan. If that person doesn't pay, the money disappears from the system. The system relies on debt growth. Every loan generates interest, and the extra money to pay that interest comes from more loans. Perpetual growth is not a flaw, it's a feature. The system's creators knew most people would rather feel rich living in debt than feel poor being free. For example, the average American family carries over $150,000 in debt, and the national debt exceeds $37 trillion. Most people think it's their fault. It isn't. They are just playing a game whose rules were written by those who profit when they lose. Consider credit cards. When you swipe your card to buy a phone or a laptop, the bank doesn't pull existing money from somewhere. It creates that money digitally. You are effectively borrowing from the bank's system, and interest ensures that the bank profits, while you slowly repay over months or years. Multiply this process by millions of transactions worldwide, and you can see why the financial system is dependent on debt. Without it, it collapses. If you haven't subscribed yet, subscribe now. This channel reveals truths about money that no one tells you. The debt trap. You might be thinking, but I could just avoid debt. Technically, yes, but the system has psychological hooks. The strongest is the status effect. Money is no longer just for survival. It's a signal of success. The system ensures you desire expensive things. A new car, a big house, a luxury phone. You weren't born wanting this. You were conditioned. Advertising, social media, friends, and the cruelest part, the system allows you to have these things before you can truly afford them. That's debt, time travel for consumption now and payment later. While you pay, you are trapped. You can't quit your job. You can't start a business. Debt immobilizes, but in comfort. Those at the top depend on this. People in debt are predictable and controllable. And then there are financial products designed to extract money, credit cards with high interest, Overdraft fees, complex loans. None of this is accidental. It's designed to confuse and keep you paying. Let me give you a simple visualization. Imagine a hamster wheel. You are running, getting a little ahead, but no matter how fast you run, the wheel keeps moving. That's debt in the real economy. It makes you feel like you're progressing, but in reality, most of your money goes to interest, fees, and servicing existing obligations. Now, a question. Have you ever felt trapped by debt, even with a good salary? If yes, comment, I want to learn. This helps create a community of people learning to escape this trap. How the rich use debt differently. And those who understand the system, the wealthy use the same debt differently. While you take loans to consume, they take loans to invest. They buy real estate, businesses, stocks. Debt increases, but assets grow faster. And the interest they pay? Often tax deductible. They use the system to their advantage. You suffer under it. Same tool, opposite effect. Compound interest is the most powerful force in finance, but not in your debt, in their assets. $10,000 invested at 10% per year becomes over $450,000 in 40 years. But to invest, you need money free of debt. The system ensures most people are busy paying debts, never building assets. The wealthy often start with generational capital. So by age 30, their assets are already generating income. Meanwhile, the average person only starts getting out of debt around age 50, just when they should be planning for retirement. The math was never in your favor. Think of it this way. One person borrows to buy a car. The value depreciates and debt grows. Another person borrows to buy an apartment building. The building generates rent, covers the debt, and appreciates in value. Same principle. Debt is neutral. How you use it determines your outcome. If this is opening your eyes, share this video with someone who needs to understand how debt works. Signs of financial freedom. What can you do? First, understand the game. Knowledge won't magically free you, but it prevents guilt. When you understand how debt and money work, you can make different choices. You don't need to signal wealth you don't have. You don't need to consume what you can't afford. You can use debt strategically to invest, not to consume. You won't get rich overnight, but you can create a life where money works for you, not the other way around. Knowing what the system expects allows you to exit autopilot. You won't be a slave to rules that only favor the wealthy. Some simple strategies. Prioritize assets over liabilities. Avoid consumer debt. Invest small amounts consistently. Take advantage of legal tax benefits. Continuously educate yourself about finance. The difference between those who struggle and those who prosper is applying knowledge correctly. Why most people never learn. You might ask, if this is simple, why don't most people learn it? Because the system doesn't want you to learn. Ignorance generates profit. People in debt buy products they can't afford, accept bad jobs, and never question banks or governments. The system also exploits emotions, fear, status, social comparison. It keeps most people busy, surviving, while a minority accumulates wealth by understanding and planning. Even those who try to escape face obstacles, fees, bureaucracy, complex contracts, aggressive marketing. All of this are layers of protection to keep you inside the system. Strategies to change the game. There is a way out. Start with deep financial education. Understand how money is created, how interest works, how taxes affect investments, how debt can be a tool. Then act. 1. Full control of cash flow. Know where every penny goes. 2. Eliminate bad debt. Debt that doesn't generate assets. 3. Invest early and consistently. Even small amounts. Time is your ally. 4. Use debt strategically for businesses, real estate, or income-generating investments. 5. Diversify. Passive income, digital assets, real estate, stocks. The goal isn't instant wealth, it's control and freedom. If you want me to make a video showing step-by-step how to apply these strategies with real examples, comment, I want to see the power of knowledge. Money is not wealth. It is trust, debt, power, and strategy. Those who understand this have a huge advantage. Those who don't are trapped in work, consumption, and guilt. Learning the game doesn't guarantee immediate wealth, but it ensures you won't be manipulated by it. You can make conscious choices: when and how to spend, invest, and accumulate wealth. Next step: educate yourself, apply, and reflect. Understanding the invisible rules is the first step toward financial freedom. Before you go, subscribe, and share this video with someone who needs to understand how money really works. The next episode could change your financial life forever.